Bitcoin just slipped under $110,000. And headlines are already screaming breakdown. But what if this isn't weakness at all? What if it's the exact same bear trap that's fooled traders 4 times in a row? In this video, I'll show you why some of the smartest money in the world is quietly calling this dip the opportunity of the year. And here's the twist: while Bitcoin steals the spotlight, Ethereum may be setting up for something even bigger. So is this really the end of the run, or the most obvious setup no one wants to believe? Let's break it down. Every single time in the past 4 years that Bitcoin touched its long-term support, the same thing happened. It dipped. Looked terrifying. And then it bounced so hard that those prices were never seen again. April 2025? Same story. Late 2024? Exact repeat. Back in 2023? Identical. And here we are again. Bitcoin drops under $110,000, social media is panicking, but the macro support still hasn't broken. So the real question is, are we watching history rhyme yet again? If it is, then the upside isn't just a bounce, it's a rocket. So how high could it really go? VanEck CEO laid it out in one brutal line: if Bitcoin reaches just half the market value of gold, that's a $400,000 Bitcoin. Boom. No hype, no guesswork, just simple math. Bitcoin is digital gold. Limited supply. Global adoption. Institutional rails already built. For the biggest players, this isn't a question of if, but when. But that's the conservative view. Because insiders closest to the action? They're talking about something far bigger. Whales play a ruthless game, they push price into thin liquidity to shake out weak hands. That's not manipulation, that's how they accumulate. And while retail screams crash, insiders are saying the opposite. Eric Trump himself was quoted: "There's no question in my mind Bitcoin hits $1 million. Nation states are buying. Fortune 500s are buying. The biggest families in the world are buying." Now, do you believe him? Maybe. Maybe not. But when people with access to those kinds of rooms talk like this, you can't ignore it. Still, here's where the story flips. Because the coin institutions are pouring into in 2025. Isn't always Bitcoin. Ethereum is quietly stealing Wall Street's heart. Bitwise's CIO admitted it: some professional investors are skipping Bitcoin entirely and going all in on ETH. Why? Because Ethereum tells the story they already understand: cash flows, tokenization, stable coins, and yield. Just look at the flows. In recent months, Ethereum ETFs pulled in 10 times more than Bitcoin ETFs. 10 times. That's not a fluke, it's preference. So if Wall Street's appetite is shifting, what happens to the rest of the market when that liquidity starts spilling into alts? With the Market Structure Clarity Act on deck and 90+ ETF filings across altcoins, conditions are building for rotation. Think about it: BTC attracts attention, ETH absorbs institutional flows, and then the money trickles further out the curve. This doesn't mean every alt explodes. But it does mean the setup for altcoin season is forming right now. And if history is any guide, when the rotation starts, it moves fast. But before we get too excited, let's check the reality checks most people are ignoring. Yes, you've probably seen wild claims, like XRP to $10,000. Let's be real, that's fantasy math. Could XRP move higher on community energy and institutional interest? Absolutely. But $10,000 per coin is impossible without rewriting global finance. And in the short term, Bitcoin can still whipsaw lower. Bear traps always look scary in real time. The risk isn't that it goes a little lower, the real risk is being underexposed when the breakout comes. So how do you play it smart without FOMO or leverage? Here's how I see it. Core stack, long term, keep building exposure to BTC and ETH on dips. Fear days or buy days for the patient. Swing stack, tactical, wait for Bitcoin to reclaim its short-term moving averages and ride momentum. Rotation slice, alts, use a small percentage to catch confirmed alt breakouts once ETH strength leads the way. And most important? No leverage required. Separate your long-term conviction from your short-term trades. This is a marathon. But what happens if VanEck is right, and Bitcoin really does march toward $400,000? Bottom line, this doesn't look like weakness. It looks like pressure building behind the dam. If history repeats, this dip will read as one of the most obvious bear traps in crypto history. So here's my take: Bitcoin still clears $150,000 by end of year. Ethereum keeps sucking in Wall Street flows. And the moment clarity lands, alts get their shot. What do you think? Are we in the middle of another bear trap? Or the breakdown everyone's been warning about? Drop your thoughts below, smash like, and subscribe, because I'll post my exact answer.